Do 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 do. All right, guys. VMware, VMW on the New York Stock Exchange. Sector technology, industry, IT services, and consulting. Guys, we're going to do some Stan Weinstein once again. Stage analysis on the weekly chart. But first, I need to apply my monthly candle chart trading framework to establish the trend, the higher prevailing trend. And I think I did a few posts recently. One of my friends wanted to know about VMware, what it's all about. But now I said, let's deep dive this guy. Let's deep dive. What crazy type of patterns am I going to see today, guys? I don't always see the same things. Sometimes I'm blind. See, this could have been a thicker bottom pattern. Broke out, retest, and continued off, guys. Patterns make bigger patterns, hitting other resistance lines, support lines, drawing morphs. Then you draw new lines. And as the show continues, guys. But the rule I have is the closer the pattern is to a breakout line, the more valid. So let's say this would be my bottom pattern. Or maybe not this one right here. Let's say I have a pattern right here and have an implied measured move. I would take the top to bottom from that move, add it on top. Instead of, let's say, a bigger move from a bigger pattern. Let's say this one here. Add it on top. You take a block from the bottom and you put it on top. That is just insane, guys. Not even sure that makes any sense. See, this is further away from the breakout line. That target, I believe it has less probabilities of being reached than this closer pattern to the breakout line. And usually if you have a nice takeoff pattern here, let's say you have some consolidation around here, that target of that smaller pattern has a higher probability of being reached than these deeper targets right here, these swing rules. But this is kind of cool right here. Remember, create some black space around, imagine. Don't let yourself limited by how they format the chart when you first pop it open. And now we've been definite uptrend on the monthly candle chart. No close below. As long as you're above, awesome. If you have a close below 12-month moving average, you don't want to be there. Doesn't mean it's going to go down, but you could be in this chop, sideways action. You know what you're going to do is you're going to want for a continuation breakout off a pattern, if ever that's the case. So right now, I could say, looking at it, that my target would be even maybe here. Oh, where's my lines? Give me my lines. Right here. Even right here. So I just want to concentrate on this closer pattern with potential resistance here, potential resistance here. But if I want to rely here, here's my implied measure move. And here's my closer. And I always like, that's why it's something I call target considerations. Always trying to find a way to increase your probabilities of reaching that target. And that's by lowering the target, making sure that you're not getting greedy, that the pattern is actually the tightest pattern you can. Of course, you want nice risk to rewards, but sometimes you want to make sure you get there. And that's by making sure you don't have greedy targets, make sure you're under a round number, that you're not going to run into close overhead resistance. And right now, this just seems to be going along the way, man. I think even before, I think I might have had another pattern right here, breaking out, and that target would have been reached already. But the main thing is this uptrend. So let's zoom in on the weekly and see what's been happening at la stand. Stage 4, nice stage 1 right here. Look at that right here. This is the start. Let's remove all triangles. Whoa, come back here. Right here. This is where the whole craziness started. Nice bottom pattern. Let's see if we have a stand Weinstein triple confirmation. I have a break above a horizontal breakout line. I have crazy twice the average of previous 4 weeks volume. I have, this is the ultimate when you cross over from negative territory over the zero line on the Mansfield relative strength. That's the performance of the stock versus the index, or we were comparing it to the SPX. And that's all you need, man. Triple confirmation. Then you go on the monthly, make sure the trend's in your favor. I use Ichimoku Cloud to make sure that you're above close overhead resistance or support. That's the red cloud, close just above. And after that, it just started going up with multiple occasions. Whenever you see these candles, that means probably there was a potential for, check it out, sideways move, potential for continuation breakout. Consolidates on contracting volume. Oh, twice the average of the previous 4 weeks. Most often than not, you could probably draw a trend line. That means there was some sideways action, getting close to the 30-week average, and then bust up. Here you could have got scared a little action where you could have been triggered out. But not the end of the world, guys. You don't want to be in a stock that's underperforming going down like that. They just need time to breathe. And after that, when you get a signal to get back in, because you have twice the average of the previous 4 weeks, maybe this candle here. Check it out right here. Continuation breakout. Arrow. Arrow. I think it's this one here. This one definitely twice the average of previous 4 weeks. This one piling up on top. And RSI, or Mansfield relative strength, going upwards, guys. Bouncing off the zero line, going upwards. So multiple occasions to get back. Until here, I don't like this chop, this volatility. When you start seeing that, whenever I start seeing now a candle that has long wick on top there, I take a deep breath, remove all emotions, and then say, okay, the market's telling you this stock needs a breather. Because imagine that. Look, if it looked like that, you're in the stock for a while, and then the candle goes up, it's starting to look exponential a little bit, right, at this stage, really skyrocketing. If you have that crazy volume and it closes, Marubozu candle, it's awesome if it closes on top. But this, that means there was a lot of supply right here, bring it down. So what happens? Well, market has to digest that supply, see where it lands, where there's some demand for it, and after that, either it continues, breaks down, or it goes back up. And now it just needed that a few weeks, 1, 2, 3, 4, 5, 6, 7, 8, few months, and then after that, you got another chance to get in, guys. If you read right here, this candle right here. This candle right here, twice the average of the previous 4 weeks. And the Mansfield relative strength got time to cool down a little bit. And then you're back on track for continuation. And that's where we are today, man. Pull back up here. So this warning sign, running out of gas, final burst, seeing that often. Sometimes it's accompanied by tweezer tops. The second candle after that, that's going close to the top, but it's a red one. That means it closes super low. And what I don't like, I'm starting to notice what I like and don't like, in stage twos. I love this in stage twos. Ninja, call it the ninja climbing the stairs. Don't look at me. Let me go up. Nobody sell. No. Yeah, I'm going up. Yeah, don't look. And this is like, oh, I went up too high. Everybody's got their eye on it. And then whatever reason, profit taking, whatever, and then down. Then you need some time for the attention to go away, to cool down. So I want to see these small increments week over week over week. I don't like when it starts moving up and down, what I call volatility. And that's where we are now, guys. Still stage two. And if you didn't get in right here in April, might wait a little bit. Might be some sideways action here. And let me get my pen out. And maybe it's gonna get some candles here, and then maybe continuation breakout. Make sure we got the sectors in line. That's the technology, tech. Here, information technology, still in the stage two. No worries there for now. On the weekly, on the monthly, I believe same thing. But I keep mentioning, this is like exponential or really, really steep. Not a super duper fan. Gotta keep an eye on that. And for the industry, it's part of the consulting and IT services, IT consulting and other services, and that's still in the stage two, guys. What we could do is one final duper check. And IT consulting is underperforming the SPX. Not super. And I'm just going to compare VMW. I'm going to compare VMware with its peers within that industry. And we're outperforming our peers. So if ever you want to be in that industry, VMware is a good choice. That particular industry is underperforming the SPX, so maybe not the best industry to be in. And the sector is information technology. I just want to see. It's outperforming the SPX for a while. So those a lot of elements from forest to tree. A lot of things are aligned, and it's just a question of waiting. If you're in, you know that you're still in the stage two. You could look at my previous podcast at the beginning of the Secretwars episode, or read Stan Weinstein's book, Secrets for Profiting in Bull and Bear Markets. How to move your sell stops along the way below laws, how the trend lines are set, how to get out when you have warning signs that start adding up saying, I shouldn't be here anymore. That's it, guys. I hope you enjoyed it. See ya. Ciao.